What's up, guys? Have you ever thought about owning real estate property to earn income? In this video, I'm going to talk about two different ways that you can do just that. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty. I appreciate you guys checking out the channel. I appreciate everybody that's been showing me love and subscribing. If you do like anything in this video, or you find anything in this video useful and someone else could benefit, please subscribe, like, share. It really helps me out. And like I said, I just want to make sure that these avenues are known to everybody. Now, let's get into the topic. Today, we're going to be talking about the two different ways to go about owning real estate property. We're going to be talking about residential rental properties, and we're going to be talking about REITs. We're going to talk about these two different avenues, and we're going to see the pros and cons of both of them. Everybody know that owning real estate is one of the easiest ways to earn income, and is one of the easiest ways to build wealth. If you look at the wealthiest people in the world, the way that they have built their wealth is off real estate property. So we're going to talk about the two different ways to own real estate. Let's start with residential rental properties. First, of course, everybody knows what a rental property is, but we're going to go over the definition anyway. A residential rental property is a property an investor buys for the purpose of renting it out to a tenant, via lease. That's basically what a residential rental property is. The first pro is that, of course, you get a regular cash flow. All right, you get a regular cash flow because you will be collecting rent from tenants on a monthly basis. So it's a regular cash flow for you, and you would just be receiving that income as long as your tenants pay on time. Second pro is asset appreciation. While you own this home, if you got it via loan, while you are owning this home and your tenant is paying you money, you're paying your loan back, basically with the tenant's monthly rent. Hopefully, if you got a good property, you're paying that loan down, and as you pay that loan down over time, the total value of your property is going up and your loan is going down. So that's what I mean by asset appreciation. And if you bought your house cash money, while you're collecting rent, you still own the asset. The price of the asset typically doesn't go down. If anything, in most areas, the housing market usually goes up. So you're going to be getting this appreciation for the land value of your property the whole time. You can't go wrong with owning land or property. Unlike something like a car, you get a car, as soon as you get the car, it depreciates. Property usually appreciates. Third pro, you will get tax benefits, tax deductions. Anything you do to your property, you will be able to write off in deductions. So that's one of the things that homeowners can do. They can write off any work they have to do to the property to make that property's value go up. It's a tax write-off. Fourth pro, when it comes to a physical residential rental property, you have complete control. You control how much rent you want to charge. You control what tenants you want to be in your property. You control everything. You control what improvements you want to make to your house. You control what that value of your house is. You control everything if you are a landlord. Basically, that's where you would be if you own a residential rental property. You'll be a landlord and you control everything. So you're going to get that feel of being hands-on with the whole process if you go and invest in a residential rental property. You're going to get the whole hands-on experience. You're going to be the one behind the wheel, and if your property is profitable or not, you have control of that. Who comes in, you have control of that. So that's one of the biggest perks to having a physical residential rental property. Pretty good. Now, let's talk about the cons. One of the cons of having a residential rental property is because it's so hands-on and you control everything, you have to have good management skills. You have to manage how work gets fixed. You have to manage who's going in your house, how to select a tenant to go into your property. You have to have a good set of management skills because this is your business and you are in the driver's seat. So you have to be on top of these things to make sure your business is profitable. If you're the type of person that doesn't have good management skills or like hands-off investing, a residential rental property might be cumbersome for you. Con number two, you have to have capital to invest in a residential real estate property. So you have to get this capital by via loan or you have to have cash for it. So either way, you have to have a sizable amount of capital to even go into the field of being a landowner or property owner. You have to have this capital. So if it's via loan, you got to make sure that your credit and stuff is good. Or you, like I said, you just gotta have that cash on hand. And the last con for owning a residential real estate property, you have to have certain expertise on being a handyman or knowing the process of fixing something. If you don't, you will be paying a lot of money for other people to come work on your property. A lot of times they could overcharge you for something that's simple if you don't know how to do it yourself. And of course, it's more beneficial for you to be able to fix it yourself because it's cheaper. So if you're not a hands-on type of person or you don't know how to fix things, you should make sure that you got in your pocket someone that knows how, because if you don't, you're gonna find yourself in a world of trouble when things need to be fixed. So that's a con. You either need to know how to fix it or have these expertise on how to fix things. So that's the general summary of the pros and cons of owning a residential real estate property. On to the second way of earning real estate income, REITs. REITs are real estate investment trusts. They are companies that make debt or equity investments in commercial real estate. There are three types of REITs. You have private REITs, you have publicly traded REITs, and non-publicly traded REITs. There are three different types. To go over these three types really quickly, publicly traded REITs, they are on the stock market. Non-publicly traded REITs, they are held by companies that you have to go to their physical site and invest in the REITs that way. And these REITs have different stipulations than the ones that are on the stock market. You have to hold these REITs for a minimum a year, and it's usually a certain amount, a dollar amount that you have to invest in these types of REITs to even be able to buy them. All right, and then you have private. Private REITs are usually for big dollar investors. They usually have a certain set price to invest, and that set price could vary, but it's for high-end investors. So that they kind of keep the little guys out of those types of REITs. That was just a quick brief rundown on the three types of REITs. Now we're going to talk about the pros and cons of REITs. One of the pros of REITs is that it is a hands-off passive income. Unlike a residential rental property, which is more hands-on, you are in control of everything. A REIT is passive. You don't have that much control, but it's passive, so it means you don't have to do any work. So that's one of the pros of REITs. Pro number two, no expertise. You don't have to know how to fix things. You don't have to know your way around Home Depot or Lowe's. You don't have to know which contractors to call for different problems, electrical problems, plumbing problems, roofing problems. You don't have to know anything about owning a home, fixing a home. Your expertise, you have to have zero expertise. Third pro, it's a low investment minimum. Meaning if you go with the publicly traded REITs that are on the stock market, they are pretty cheap. If you look at them, they're pretty cheap, and you don't have to have a massive amount of cash to get in those types of REITs. But as I just said, the three different types of REITs, to get into the non-publicly traded and the private REITs, you do have to have a big bank. But the publicly traded REITs that are on the stock market, they're pretty cheap, so they're low-cost investments. Pro number four, liquidity. You can easily sell your shares of a REIT on the stock market, quick and easy. So it's different than, of course, having that residential real estate property. You have to go through the whole process of selling a home, putting it on the market, putting it up for sale, letting people bid on it. If you got a REIT, you can easily sell it quick and get your funds from that investment. Pro number 5, diversification. You don't own just one property. You are a shareholder of a company that owns multiple properties spread out. So that's one of the pros. Pro number 6, cash flow. All right, so REITs have to pay out 90% of their taxable income to the shareholders. So they pay this out in dividends. That's why REITs usually give more dividends than a lot of other stocks that's on the stock market because of this stipulation that's placed on them. Pro number 7, REIT owners get a 20% tax deduction for the income that they received off the REITs. Okay, so that was a lot of pros, but let's get into the cons of REIT. 1, volatility. It's a publicly traded company. If you buy your REIT on the stock market, of course you guys know stocks go up and down. It's volatile. So if it's something going on like how COVID hit, all of the REITs, they crash. They crash heavy. So if you had your money in REITs, the equity went down on your positions. Con number 2, less control. You don't have control over anything. You don't have a physical property that you can go and say, this is my property, I own this, or I want to go in and look at this property, as you do when you own an actual rental property. Con number 3, you aren't a landlord. So that feeling of owning a physical property, you don't get that because you don't own a physical property. So that was a quick rundown of the pros and cons of residential real estate investment properties and REITs, real estate investment trusts. I have been on both sides of the spectrum, and I can tell you that both give you a good feeling and both are great ways of building wealth. A residential property gives you that pride of being a homeowner, being the landlord, being the ultimate deciding factor of who stays in the home and receiving the monthly income. But just know that it does have drawbacks of making sure that you know how to handle everything that comes up with that property, the management side and the physical hiccups of anything that goes wrong in the property. You need to know how to handle those. But I can say that you will learn a slew of things owning a residential real estate property because, as I said, you have to be able to either know how to fix it or you're going to pay someone to do that. I learned a whole lot of things renting properties out. I learned how to put down flooring. I learned how to patch holes. I learned how to do roof work. I learned how to go through the house and make sure that it is sound for inspection, smoke detectors. I learned how to paint. I learned how to go fix plumbing problems. I learned a slew of things, and I definitely learned my way around Home Depot and Lowe's. So if you are the hands-on type of person, oh, that's perfect for you because you will learn a slew of things if you go into residential real estate property. REITs, I've been in that field for a short time, but again, it's a great feeling knowing that I own shares of commercial properties and I don't have to lift a finger and I receive income for just owning those physical properties. So both have its perks. It's all based on the type of investor you are. I just wanted to go through a quick run through because, of course, we all know that real estate investments, they are great investments to build wealth for the future. So these two options, they both deserve a thorough look through for anybody that's trying to generate that wealth and build for the future. If you like this video, please like, subscribe, and come back and see me. Or if you got any questions about anything REITs or real estate investment property, please drop them in the comment. I'm just here to try to open you guys' eyes to a few of these investment moves that can help you out. All right, I'm not a financial advisor. I just tell everything how I see it and experienced it. Thank y'all for checking me out.